Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 18th of March, 2021. Thanks for joining me. This is episode number 1957. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment after the rally yesterday in the indices. Following the FOMC decision, we saw rates increase overnight. We saw the Treasuries falling relatively significantly and the market dropping with it. Again, yields, inflation are taking center stage. Currently, we're seeing the NASDAQ down 225 points, 225 points, 1.72%. 1.70%. Crude oil, which by the way has rolled to May, is trading at 63.52, down 1.72% or $1.10. The bonds are off an entire handle and 17 ticks. That's what I'm talking about. The bonds and the 10 years have dropped overnight, basically synonymous with the equities. The Russell's off 0.81% or 19 points. The S&P is off 27 points. The S&P is actually trading up against, and it tested the MC point of control of this area, newly established balance area right here at 39 in the 39.30 area. 39.33 has pulled back to it, so it is in the chop pre-FOMC yesterday. We'll look at that in a minute. The Bund's off 42 ticks. The Dow's off 12 points. And the leader today is the DAX. The DAX is leading higher based on news out of the automotive sector in Germany. So that's where we stand. The gold, by the way, is also down. Gold still hovering around 1726. It's off $1 from yesterday. Silver is a little bit higher, up 9.5 cents. So overall, a pretty sensitive market this morning. Given the movement and the range that we've had, I expect that today will be relatively active. A good day to pay close attention to the action and make sure that we don't fire off our bullets on trades that are not worth firing bullets at. The S&P currently has 292,000 contracts traded. In front of you, it shows 274, but this was printed or this was generated about 15 minutes ago. The range has not changed, though, 46 points, and the overnight inventory at negative 31.5. Negative 31.5. Let me just make sure that this is correcto. See where the inventory is. Yeah, interesting. A lot of movement from yesterday's price, but a lot of the volume is not translating. So 37.5% short in terms of overnight volume. And we have a multi-distribution profile. We have about 4 distributions. We'll look at that also. What's on deck for today? We had initial claims, and then later on we get the inflation rate in Japan, GFK, consumer confidence this evening out of the UK, Great Britain, and then interest rate decision out of Japan. So that's where we stand. Taking a look at what was expected yesterday, and by the way, the roll is pretty much done as of yesterday. If you recall, here's what we added in yesterday's session. You can see it's gone flat. We're already in the above the upper band, or at the upper band. The roll is no longer material to trading. Here's what we looked at yesterday. That looks like a terrible chart there, I know, but the primary driver here is that we're likely to pull back We're likely to pull back. Let me make this full screen. The expectation is we're likely to pull back to the 39.25 area, consolidate in that area, and then, well, actually, the primary scenario is responsive, looking to push to 48, consolidate before the FOMC, and then break higher or lower, depending on what our friend Jeremy Powell does. The secondary scenario is to push again, responsive towards yesterday's range. Again, fail to do so, break down into 39.25, consolidate in that area, and then potentially start to move towards 39.20, 39.12 actually, and then the FOMC. Here's what actually happened yesterday. We had a consolidation. This is the prior day's range right here. The prior day's low is this green line right here. I know there's a lot on this chart, but the green line is yesterday's low. From here, we open, we consolidate, we attempt to be responsive. It looks like scenario 2. We attempt to be responsive and fail to do so. Again, scenario 2. Right here, we attempt to be responsive into the prior day's range. Here's the prior day's low. Let's choose a better color, huh? This is the prior day's low right here. We attempt to respond into that area, and we fail. We push down into, as I said, the 39.25 area, consolidate there, and I expected it to kind of spill as we've broken the one-time framing up. Again, this is what it did yesterday. Consolidate, attempt to push back into the range. Why does it keep changing my colors? Why are you doing that? Attempts to push back into the range, fails to do so, consolidates, and then I expect it to spill down into the 39.25 right there on the nose, right? 39.25 consolidates, and then the expectation is it starts to move down through, breaks into the 20, gets through the 20, and then starts making its way to 3,900. Instead, we broke the 25, we hit the 25 on the nose, so scenario 2 in play, comes back into the opening swing, consolidates until the FOMC. And I had shown you yesterday that the FOMC generally resolves in 3 moves, right? This is what I was talking about. 1, pull back, then the run, or 1 down, pull back up, then run down. Here's how this played out yesterday, this 3-move thing. There's the initial move, tough to catch this move, and then it generally pulls back. So this is the second pull, 2, and then we're looking to trade the third leg number 3. And what it did is it repeated this one more time for a continuation trade, which generated another impulse to the high. We pushed into 73.50. If you recall, there has been a stock zone and a measured move level right here at 75. It's still there. In fact, master levels, you can see there's measured move. The MM stands for measured move right here. We stopped just short at 73.50, and then we flagged down into the close. We did not move the point of control higher, and because of the amount that was traded here, we generated an MC point of control right here at 39.3350. 39.3350 is now a magnet in this area. But the close yesterday did not shift the point of control higher. We had a neutral extreme up day. But again, we didn't shift the point of control higher. It remained inside of the initial balance. It's not as strong as we would want it to be for continuation. So we would expect a continuation overnight, and then consolidation up here in the upper end of the range for it to make its next move. But that's not what the boys over in the financials had in mind. So we pull back on this flag and we accomplish what's expected of the auction. We push higher, we push through that high, we push higher, and then we start to sell off as the treasuries do. And so we move back down to where? We move back down into this high volume node, and we build our high volume node on top. And look at that overnight point of control right on top of the acceptance area from yesterday. Very orderly, and we're sitting in this chart. Look at, remember the pattern here: move down, impulse down, continuation, consolidate. This is the S&P. Here's my overview chart, which includes the treasuries. The treasuries are down here. This is ZB. This is the bonds. This is the notes. And you see the same move: push down, consolidate, push through, and sit at the bottom. The 10 years near lows. The 10-year, geez, the push down right here. The 10 years near lows, and the bonds are near lows, consolidating near lows, and they basically have the same move as the S&P. Generally, these products move opposite each other, but as I explained several times now, as the bonds drop, as bond prices drop, this is the bond price, the yield goes higher because the coupon rate remains the cheapest to deliver. Coupon rate remains the same. So if price drops, then the yield on that coupon increases, and the yield on that coupon dictates the value of risk in our economy, and it dictates the value of money, the cost of money. The cost of money is going up, and that's going to impact the stocks that operate within the S&P 500. Right, so that's your quick crash, macroeconomic crash course of the day. So we have a very interesting pattern here. We've got a market that is really moving around. The volume is finally picking up. We're at 300,000. There's a fair amount of volume, and a really decent range. I expect the open to be interesting this morning. I expect there to be some pretty good action. I really would encourage you to shut off any distractions and focus on the price action this morning. We are back again. We are back in the lower distribution of yesterday with a lot above to work through. So there's a fair amount of resistance up above, and we have basically reversed what we did after the FOMC. So there's likely to be some forced adjustments in various portfolios, and that's likely to create opportunities for day traders, and we are day traders. So this is beneficial to us. Here's what we did yesterday. We opened, we tested down to that 25, as I showed you on scenario 2. There's a stock zone down there, and then we ended up pushing and engulfing the prior day. This was a really weak push into a new all-time high, and we ended up pushing back up there, forming this point of control on the weekly at 39.64. So we have two very important distributions in play, with the lower distribution being the MC point of control. Why is it the MC point of control? It's because I'm including everything from the gap forward. Generally, that's what I'm doing now. I'm pulling the auction after the gap, and I'm putting it together. So if I draw a profile around the gap all the way through, you could see the point of control is right where we're at. We're trading at 39.3350. The point of control is 39.3350. We have a very clear low volume node in between, and then if we clear that low volume node, if we clear this area down here, If we clear this a low volume node, then 39.64 becomes the next key area to test higher. And so that's what we're looking at right now. So, not to confuse things, I want to remind you that we did make a new all-time high yesterday. We had a bullish engulfing kind of candlesticks yesterday, and then now we're reversing that. This is likely to have an impact and provide volatility for today, which means that it's likely to provide opportunity for both risk and for gain and loss today, right? Yep, diamond hands. So that's where we stand this morning. So, what are we looking at in terms of what's expected for today? Let me set up our scenarios here. Okay, so stock zones on, master levels on. Here's what we're looking at for today. Again, key thing to take away, there's likely to be decent volatility and decent opportunity. Today, we're opening right on top again, as if I haven't mentioned it 15,000 times already. We're opening on top of balance from yesterday. We're opening on top of the MC point of control, of the prior 5 sessions, and we are right here. What do we expect? We expect chop on the open. We are opening in balance. I'm expecting it to respond to the upside to attempt to reverse this move, and I'm looking for it to push into this 39.50 area, consolidate here, give it up, and that creates an opportunity for sellers to come in, and it also creates an opportunity for nervous longs to liquidate, to push us through yesterday's low. So I'm looking for this low to be taken out at 25, that stock zone that held yesterday. Look at that stock zone, right on the money. Um, Looking for that 25 to be taken out. I'm looking for the one-time framing up to not resume, but to continue to be murky, and then to work itself down into lower prices. Again, as the market pushed up, it really did not have a lot of support yesterday. Look at this. There was just not a lot lifting yesterday despite the move up. It really has had a hard time generating volume to push higher yesterday. So I'm expecting that weakness to carry over into today, especially given the location where we're opening. And that gives us the primary scenario. Secondary scenario, same thing, open auction that drifts lower, starts to move towards 25, tests, pokes the 25 down into the 17 area, consolidates down here. Then we get a reversal back, and we end up coming back into this MC point of control, and I'm making an attempt at a run higher into the close. I'm not expecting it to take out this key area up here in the which is the 61, 25, 62. I'm expecting this to be solid resistance up here, relatively solid resistance. And then, of course, the 50 is expected to provide some resistance. The 50, not only a mid-century figure, but we have VWAP there. We have last week's high there. This is the area I'm expecting to get tested, this 50 area, looking for a reaction. So what am I going to do as a trader? I'm going to watch to see how, because we're opening on top of the MC point of control, on top of yesterday's point of control, I'm not going to interact with the market. I'm going to see how it's going to respond. I'm expecting chop. There's no sense in sticking my neck out. And then I'm going to let it move. And as it approaches 50, if I detect in the order flow, if I detect that it's really struggling on the way up, like it's putting up these bars and the delta's not moving and it's the aggression is not there, then I'm going to stock a short anywhere between 46 and 50, and looking for a short back to yesterday's point of control. And the MC point of control, expecting it to chop around in there, and then finally give up for a target of 25, 17, and beyond. That's the key trade of the day. That's what this green line is telling me. This doesn't mean we're not done, because the weekly one-time framing is still for the long side. It's still moving up on the weekly, but on the daily, I'm seeing weakness. And what does that mean? Weakness on the buy side. It means that the market is likely to need to advertise price lower to attract more buyers. And so I'm going to favor the short side. Does this mean I come in with a short bias only and I'm going to bet my entire account on a short trade because I got to, you know, I've got to do the GameStop thing and just bet my life on one move? That's not going to happen. You're still managing a risk the same way. This trade is like every other trade. It has the same parameters. It's just one trade. But at least I have a plan, and I anticipate where the reactions are going to be, and I anticipate holding through those reactions. Good luck today, and I'll catch you tomorrow morning. For those of you at Convergent, don't forget, today we have Dr. Andrew Menaker on for our trader mindset session, and we're going to be talking about common obstacles for traders to follow their plan as part of our Trade Right challenge and Trade Right program. Good luck.